Welcome to this Think and Link series. I'm your host, Srinivasan. We all have heard the aphorism nothing is permanent except death and taxes. You cannot cheat either of them, and everyone will vouch for it too. Now, we are going to talk about taxes and the government's mindset. Now, every government, in its anxiety to increase the tax revenues, often uses innovative methods to increase the tax base. That's very simple. But sometimes you are flummoxed and wonder whose creative idea was this? Confused, right? Difficult to understand what I'm saying? Well, I'm talking about the levying of GST on corporate guarantees. Yes, you heard it right. Levying of GST on corporate guarantees. So let me start from the very beginning by giving you a background regarding guarantees. The simplest way in which a guarantee can be defined is that one party assures another party's accomplishment of a promise. So there is a party which promises, and there's another party who assures the third party about the accomplishment of a promise or a reimbursement of a debt. It could be a debt also, if the latter party misses to discharge the liability or accomplish the commitment. I guess now that's very, very clear, right? Now, as an ex banker, I've had an opportunity of issuing and dealing with a slew of different types of guarantees, be it personal guarantees, corporate guarantees, and of course, bank guarantees also. So I can vouch that it is a standard practice to obtain personal guarantees of partners, directors, or third parties of a borrower to secure their lendings. Where a loan or an advance is given to the subsidiary of a company, along with the personal guarantee of the directors, where it is, of course, feasible and tenable, the corporate guarantee of the holding company is also obtained. So, this is the background of our topic. Now, look how creative and innovative our tax authorities are. Last year, on 23rd of October, a circular was issued by the Central Board of Indirect Taxes and Customs. Now, this circular, the circular number, if the viewers are interested, circular number 204 oblique 2023 was issued to clarify on issues pertaining to taxability of personal guarantee and corporate guarantees in the GST scenario. In other words, whether GST, that is the goods and services tax, is applicable or not. This particular circular clarified that. Now, the circular was very clear in informing that a corporate guarantee given by a holding company to a bank or a financial institution for the sanction of credit facilities to its subsidiary would be treated as a supply of service. So, if it is treated as a supply of service, it is subject to GST. This was the logic. It went on further to state that tax incidents would arise even if no consideration is involved. So, at one stroke, this circular led the tax authorities to conclude that every corporate guarantee transaction, other than the personal guarantee of a director, was subject to GST. And that there was no need to go into the merits of each and every case. And the CBIC, in their amended rule 28 into bracket 2, provided that GST is payable on 1% of the value of guarantee or the actual consideration, whichever is higher. That's it. This particular circular came about, and this is the full gist of the circular. And this circular created quite a stir in the corporate sector environment. Industries across all sectors, ranging from FMCG to infrastructure, received such show cause notices and demand notices. Demands were raised on all holding companies if they had issued guarantees for securing the credit facility of their subsidiaries. And if such a holding company is located outside India, they were not spared. The Indian subsidiary for whose benefit the corporate guarantee is given will have to adhere to the GST demands. And so, obviously, huffed and puffed and peeved by the circular, the matter went to the court. Now, in a relief to the India Incorporated, the Punjab and Haryana High Court has stayed this circular that subjected the corporate guarantees given by the holding company for the benefit of their subsidiaries to GST. So, for now, there is relief. But this is an interim order. The matter is, of course, pending before the High Court, and there are various issues which is going to be taken up, and it also includes the valuation of corporate guarantee as well. So let's understand more about this corporate guarantee. I'm sure that everyone would be aware. In the simplest form of explanation, it's a guarantee given by one business house or by one corporate house or by a holding company to another group company or subsidiary company. And generally, guarantee by one entity to another entity is given at the time of credit facilities being availed by the other group company. So simply said, when a subsidiary, is applying for a loan, which could be a term loan or a working capital loan from any financial institutions, the holding company automatically comes forward and stands as a guarantor for the subsidiary company. This has very great advantages because there could be an advantage in terms of rates of interest. There could also, a quick disposal of your loan requirements can also be achieved because it is the uh, credit worthiness of the holding company which actually acts as a, I would say that which acts as a sort of a incentive for the bankers to lend money. So supposing when I'm talking about if Hindustan Lever as a holding company were to give, say, a corporate guarantee to its subsidiaries, the bankers would definitely give the credit facilities with their eyes closed. Now, another important thing that you must remember is these guarantees are mostly given by the holding companies to the group companies or group company subsidiaries without any charges or consideration. The objective of such guarantee is to facilitate the subsidiary company to avail the credit facilities for a smooth running of the business. That's all. This is the role of a corporate guarantee. Now, how does it differ from a bank guarantee? So let us understand how it differs. Of course, it is quite unfair to compare a corporate guarantee with a bank guarantee because banks are in the business of issuing guarantees for specific purposes. So you have financial guarantees, you have performance guarantees, and you have earnest money deposit guarantees, you have bid bond guarantees, you have shipping guarantees, you have deferred payment guarantees, you have guarantees for the payment of customs duty, advance payment guarantees, so many things. There are so many different varieties of guarantees. Now, charges or commissions varies from bank to bank. Now, under the GST laws, such services of the bankers are treated as supply of services and subject to GST. Now, since banks are in the business of issuing guarantees and the fee or the commission charged by the bank is a value for the transaction on which GST is levied, that's absolutely okay. But in the case of corporate guarantees, it raises a lot of questions. No charges are paid by the recipient by these services. It is also unsecured in nature. No security is offered by the recipient to the guarantor. So, the question of why GST should be charged is a moot question. And therefore, the whole issue of taxation is puzzling. And as I said, this matter is in the court. So the court will have to first ascertain whether issuance of a corporate guarantee by a holding company for securing credit facilities of their subsidiary amounts to a supply of service. That's the first question. Second question is, how will the corporate guarantee be valued, presuming that the court does say that it is a supply of service? The courts clearly have a very ticklish and complex issue on hand. But for now, with this stay, with this stay, corporates reeling under show cause notices and GST demand orders running into several hundred crores of rupees can breathe easy. Companies that have received show cause notices based on this circular need to approach the High Court for quashing the same. So let us see how this issue pans out in near future. So that is all in this episode. Bye bye, ciao, and see you in the next episode.